Well, welcome to Bloomberg Quint. Finance Minister Nirmala Sitharaman has presented a maiden budget and a lot of announcements for foreign investors as well. So what are foreign investors making of the budget? The initial take, that is. Let's take this question to our experts. Joining us right now on the show are Lucy Macdonald of Allianz Global Investors. Lucy, thanks so much for taking the time out and speaking to us here at Bloomberg Quint India. This is Neeraj Shah here. Two or three things that have been announced in the budget. The minimum public shareholding of companies has been raised or will be raised to 35% from 25% as well, with sovereign wealth funds, digital venture funds, etc. I mean, a lot of things from a foreign investor's perspective.
A bit more help to SMEs in tax. So it looks like a good balance, I say.
Lucy, the other aspects, one being the fact that now they're looking to allow FPIs to subscribe to listed debt paper as well as REITs, and also looking at merging the NRI portfolio investment with the foreign portfolio route. How does that play?
Well, we haven't looked at all of the detail yet. So I think the fact that the mood is to liberalise, to allow global bonds and to encourage more investment, private investment into to stimulate growth is all favourable as far as we're concerned.
Just also comment on the fact that now they're looking at going offshore to raise more money. We're talking about raising money via the external route. Will that probably bring about some more uncertainty from an India standpoint, if at all there are any global jitters that could affect India more negatively?
Clearly, it gives a little bit more sensitivity to global financial markets. From a starting point of zero, I think that risk of taking a little bit more is probably warranted, and particularly at the moment where you have an absolute thirst for yield in global financial markets, it seems wise to tap that if it's possible to do so. And we're seeing yields everywhere falling from even low levels that they're at the moment. So I think it's an opportune time to be doing it.
Okay, Lucy, stay on with us while we also have Mark Matthews of Bank Julius Baer. And Mark, hi, thanks a lot for joining us. Good afternoon to you from India. What have been the highlights for you for this budget? In fact, the FM categorically acknowledged the FPI participation. In fact, the inflows that we've received from the FPI community so far this year. And they've also rationalized the KYC norms, I think, which were not suiting the FPI community. What stood out in the budget for you, and was there anything more that the FM should have done?
What stood out for me were 5 things. 4 were good and 1 was bad. So the 4 good ones were the sovereign offshore bond, which is very good given that external debt is something like only 5% of GDP in India. And that'll create a yield curve, which the country doesn't have now. And then the housing finance companies falling directly under the jurisdiction of the RBI, I think will create more stricter oversight, which is a good thing for the NBFC sector. And then the government committing to put 70,000 crores, I think, into the banking sector, recapitalizing the banks. Undoubtedly a good thing. Free float increasing up to 35%. I take it as a positive. I don't think it's good to have a lot of stocks trading on a stock market that have thin liquidity. The only thing that soured the mood, and it explains why the Nifty's down, is that they're taxing the super rich even more. And of course, markets don't like taxation. But 4 out of 5 is a good number, so broadly positive.
That's right. In fact, Mark, the super rich, I think the tax rate now will be somewhere between 38 to 42%. Mark, but what did you make of the fiscal deficit number, which is at 3.3%? And this has come at a time when growth has slowed down. Market was also waiting for some sort of stimulus package to be announced. And last year, the government managed to meet the target because they cut down on their expenditure. If they do so this year as well, that will hamper the growth once again.
Well, I think you're right. Going into the budget, there was an assumption, probably because of the very strong election result, that we would see more stimulus and perhaps therefore looser deficit target, and of course it turned out to be the opposite. So maybe that's also contributing to the weakness in the stock market today. You're right. I think people were looking for a more stimulatory budget.
Lucy, from a foreign investor standpoint, now India's got a stable government. The budget has been progressive. Everything's been put in place. Just we need to shore up those growth numbers. But from an investment standpoint, from a foreign institutional investor perspective, as a market, does India still appeal?
The growth rate is slowing, and the overall valuation is on the high side. So it's not the most attractive from that perspective, but it still has better growth prospects long term than many other areas of the world, and it still has a government which is stable and wanting to stimulate that growth further with a really clear plan to be able to do that, and a mandate to be able to do it. So I think there is in a medium term a lot of potential. I think in the short term the valuations are relatively high.
On your list, where does India stand amongst emerging markets, Lucy?
We look at it very, very differently. I think what's driving India is quite idiosyncratic compared to what's driving China at the moment. So I think there's a place for both. They have different drivers.
Mark, India still remains an expensive market in the EM basket. In fact, the premium that it commands is only going higher. Will that still make a case to put additional or deploy more money into India?
I think that you pay for what you get, and that's why India is expensive. It's the only major market in the world, apart from Brazil, that I can think of offhand, which has this extremely robust demographic profile of the working age population not peaking for many decades to come, and yet it's big and liquid. So most countries that do offer this demographic profile, they might have large populations like a Vietnam or a Bangladesh, Pakistan, Philippines, you can go down the list, but their stock markets are very illiquid and therefore not nearly as investable.
Okay, Lucy, when you look at the investment climate right now within the world, and that's something that I would want your view on, you mentioned about the pecking order wherein China and India and where do they stay. But after this budget, which seems to be progressively more favorable for foreign institutional investors, you think flows would be sanguine towards India? You yourself may like China more, but just from a global CIO perspective, do you reckon flows would be more sanguine towards India?
I think there is a lot of medium-term interest towards India, and as I say, the India versus China to us is they're idiosyncratic. They're drivers. They're very different, and I think what we'll probably keep an eye on as far as India is concerned is trade and any trade conflict with the US. So far, it's been extremely safe from the tensions we've seen elsewhere. I think we need to just keep an eye on that and to see whether there's any potential for unpleasant surprises on that score, although there's a balance between the geopolitics and the desires of the US on trade.
The other aspect, Mark, is, while we look at the growth numbers, we look at the fiscal deficit numbers, and that has its own bearing on the yields as well as what the currency lands up doing. And now that we know that crude oil prices are supporting the currency in a big way, from foreign institutional perspective, the currency being at where it is right now, which is under 69, should be a really encouraging point to start investing more, and it actually could be viewed as a silver lining.
Well, you correctly identify, I think, the major linchpin for the...
Sorry, Mark, that was for you.
Oh, was that not for me? I apologize. Okay, I think the major linchpin that's been problematic for the emerging markets really over the last 10 years is the strength of the dollar. And so I agree, if you could stop seeing the rupee go down, that would be a big part of people becoming more interested in the Indian stock market. But I think that the determining factor will not be so much the what's going on in India. It will be what's going on in the United States and Europe, much bigger picture stuff. But if the dollar were to start to go down, I think that would really be helpful for the Indian market.
Lucy, same question to you. You had started answering. Please continue.
Yeah, I think it's absolutely right. We've seen as the Fed has gone 180 degrees the other direction and talking about lowering rates, the dollar has weakened, and you've seen the benefit to emerging markets and emerging markets currencies. So that is the major driver.
Lucy, since you've already highlighted your preference between which are the markets that you like within the EM basket, but if one were to deploy fresh money into market like India, of course there are growth concerns which may continue, but which are the sectors where one can expect return? Because so far index continues to be around its all-time high levels, but that's also owing to the polarized move that we've seen by a handful of stocks.
Yeah, it tends to be stocks rather than sectors that we're looking at, but the tech sector is internationally competitive, and that's an area where in digital transformation we're still seeing good structural growth. The IT service companies are clearly up there. The move to increase infrastructure spending makes sense, so therefore road, rail. So those are the obvious places to look.
Mark, the economic survey which was laid in the Parliament yesterday, they projected GDP growth of about 7% for this financial year. And of course, to achieve that 5 trillion economy mark by 2025, they also said India needs to grow by 8% after that for the next 4 years. Do you think that's achievable at least this year, considering the last quarter growth was at 5-year low?
Well, the short answer is no, but I'd sort of have to look more closely at the numbers to understand base effects and things like that. But no, I don't see how they're going to get to 8% under the current circumstances, particularly in light of a budget which was less stimulatory than had been expected.
Okay. Lucy, just, want to get in your sense as to what are going to be the key risks that you from a global standpoint, envisage that could lead to a big outflow of money, or rather probably that could curtail the money that comes into Indian shores?
Well, I think, as I mentioned, any trade conflict, which India so far has been really insulated from. And we know that there are some areas of conflict on tariffs. So I hope part of the opening up that we've seen in this budget towards foreign investment is also more broadly as far as tariffs are concerned, to encourage more companies to operate as well, and to make a more level playing field for those.
Right. Just the fact that US equity markets are also trading at record highs, and for that matter, bond traders out there are sitting on a hefty amount of cash currently. You think that it's probably that's exactly where the money is going to stay rather than come to an expensive market like India?
I think, well, as I said, with the bond, the global bond, I think there will be demand because there is this absolute hunger for yield at the moment. And at the same time, there's quite a hunger for growth. So if India can provide both yield and growth, then I think investors will be interested, certainly in the medium term. In the short term, I think India looks quite expensive, but all markets look quite expensive at the moment. So within that context, you go where the growth is.
Mark, with the recent economic data which has come from US, that's once again, tilting towards there could be a rate cut which could come end of July when there's a meeting. In fact, I believe the futures rate is already factoring some bit of rate cut. If that were to happen, how do you see the fund flows taking place between the emerging markets and the developed markets?
I would say it's beneficial for emerging markets primarily because rate cuts should intuitively be accompanied by a weak dollar. It doesn't always have to be, but if it is, then there's a very good inverse correlation between the dollar and emerging markets, and therefore I think that people would put money in emerging markets, including India.
Mark, one more question. Any key concern which is right now being highlighted by the FPI and the FII community towards the Indian markets?
The only concern, and nobody's told me this, I'm just sort of thinking it aloud as I talk to you, is that we haven't really had any follow-through rally since the election, and I frankly personally expected one. So I feel like there's some inertia now, perhaps people waiting for government policy, and perhaps they wanted to see more of that in this budget than we have seen. I'm not saying it's a bagged budget, but and we haven't got all the details yet, but I thought we would have seen more talk about labor market reform and agricultural sector reform than we have so far. But maybe that's coming. Maybe it just takes a little time.
All right, great hearing from both of you, Mark and Lucy. Really appreciate you taking out the time this afternoon and joining us. Thank you so very much. All right, and before we take that break, I want to toss across to my colleague Sajit Mangat, who is in conversation with Rakesh Bharti Mittal. Let's cut across to him.
Thank you, Devina. We have Mr. Rakesh Bharti Mittal, Vice Chairman of Bharti Enterprises, joining us from CI Delhi. Mr. Mittal, to begin with, can you take us through your first take on how do you see, what are the key things which you saw in this budget which were, new for you?
Well, let me start with two main focus areas of the Finance Minister. And one big item which I saw was on ease of doing business. There were many things she talked about. 4 codes on labor laws which should come very soon, and that is something which the industry is waiting for a long time. On the GST front, quarterly returns of income up to 5 crore. E-invoice starting from January 2020, which means there will be no requirement of e-way bills going forward, simplified GST tax returns. And I think on the MSME side, if I see the interest subvention to continue, I think there's an amount of about 350 crores put on that. Talked about setting up a platform, a payment platform for MSMEs to file their claims and also get the payments online from the companies. I think the only point I want to mention here is that the same platform should also be extended for the MSMEs as well as the India Inc. to file their claims on the PSUs and government agencies, both at the central and state level, for them to clear payments on time. There has been a lot of relief on, or I would say clarification, for the startups on the fair market valuation of shares, charging share premium, carry forward losses, etc. I think these are good things. And also simplifying the income tax returns by pre-filled forms being submitted. And I think these are the good things which I think she talked about on ease of doing business, including e-assessments on scrutiny to reduce the physical interface. One other thing which she talked at the end of her speech was to set up a mechanism or a scheme for to sort of clear the litigations on the pre-GST era of service tax and VAT. This is something which is very good, and I believe the Indian corporates and Indian industry should take advantage of this to release a lot of energy out of the system.
But do you see a lot of capital coming in?
Is her emphasis.
Sorry, what I wanted to ask you is that do you see these measures helping India Inc. to bring in more investment and thereby creating more jobs?
Certainly, yes. The FDI relaxation, and we need to see the details in insurance, aviation, and media. I think these are the 3 sectors she talked about. And taking 100% FDI for insurance intermediaries will bring in a lot of investments. Also, she talked about public-private participation in railways, the rolling stock, tracks, and freight services. This will bring investment and generate employment. On the aviation sector, she also talked about the MRO, maintenance, repair, and overall facilities, And India has the opportunity and potential to have those setups be in place in future, and also on affordable housing. So I would say that finally some movement on the real estate should start happening based on what we heard today. Having said that, she also laid a lot of emphasis on the rural infrastructure, which will help the agriculture overall. She did mention about setting 10,000 FPOs, new FPOs which will come up, and also upgrading the road network, the rural road network. Two things which I wanted to hear, which I have not, unless it is in the fine print. When do we see radical reforms in agriculture and education sector coming through, which should be taken right through the state government, being a concurrent subject, and implementation at the states? I think those are the two areas. If that can be done, there would be a lot of private sector investment which will move into agriculture, food processing, and education sectors.
Mr. Mittal, just hold on with us. The Finance Minister's press conference is about to start, so we will be cutting across that.
Sri Girish Chandra Murmu, Secretary DIPAM, Sri Atanu Chakravarti, and Chief Economic Advisor Dr. Krishnamurthy Subramanian. Today's press conference will go like this. First, Honorable Finance Minister will make her opening remarks, which will be followed by question-answer session. While asking questions, please identify yourself and your organization, and also be very brief in your asking your question. Please confine yourself to just one question each so that we can cover as many journalists as possible. Before we start, I would make a gentle request that your mobile phones should be in silent mode. Over to the Finance Minister, please.
Thank you very much for coming over for this press conference soon after the budget presentation has happened in the Parliament. I take this as an opportunity to not only answer your questions, but also to be able to elaborate on a lot of points which will be relevant for the discussions and the discourse which happens post the budget presentation. As I started during the presentation of the budget itself saying, this budget, which is the first one for this term of the government, is presented with a 10-year vision in mind. The 10-year vision is also a point of continuity from the interim budget, where the specifics of what we expect to achieve in 10 years is very well narrated. I recalled them. And also what is attainable as a target within 5 years, which is, in short, in a concise form, we say $5 trillion economy, but that is only to indicate that within 5 years, the major steps that we're going to take towards achieving that kind of a level. So the emphasis is very clearly on overall development of the economy, where you're looking at rural initiatives, all of which will give a certain dynamic to the rural area and therefore contribute to the growth. Similarly, we looked at ways in which urban living can be bettered, and what were the ways in which we were going to spend money both in urban and rural in the name of infrastructure, in the name of building better cities, better villages, facilities, and so on. In this, in every one of the point, there is an aspect of effectively managing the challenges that we have on an environment. That's why there's emphasis on waste to energy, waste to wealth management, and so on, all of which, in terms of what kind of a particular benefit it is going to give, will have to be calibrated with the particular benefit together with the collaterals which are more important. So all of which is aimed at the broad picture of the new India, where we are saying it's going to be a better India with all kinds of facilities, which are just not building one bridge, but because you're building it in a green way, is going to have an impact on all of the aspects of ease of living. Like the way we constantly talk about environment, water pollution, and degradation, and so on. So that is why the budget presentation format also was 10-year vision, 5-year target, and the 5-6 areas through which we are elaborating on the various schemes, whether it is Gramin Bharat, whether it's Urban Bharat, whether it's looking at youth. So it's not just I've launched XYZ schemes in different areas, but it's a comprehensive picture of that entire segment or sector of society being improved upon. So under that, as I said, urban, rural, youth, women have all been taken up, and also special initiatives to improve the ease of living. And one broad reference was also made for the India international image through soft power. But more importantly, that one particular sector on which there's a lot of discussion going on for the last almost 8-9 months is about the NBFCs, because they are a very critical component to our banking system, in that they are the ones who are lending to the last consumer who wants to buy his motorbike or a scooter or even purchase something, and therefore these NBFC credits were very, very critical. I've made it a point to mention as to what the government's plan is. It's not just a one-off. It's a comprehensively well thought out approach to the crisis about which all of us were talking about, and therefore on that the approach that we have taken and the approach which is going to make the Reserve Bank of India a regulator both for the NBFCs in general and for the housing, where already the NHB was doing or expected to do the regulation. Now that power through the finance bill which is presented now will be given off to the RBI. There's also this window being open for NBFC financing, and that to that window there is a backstop of the government security up to 10%, and we expect as a result the pooling of those resources or assets which can be bought and somewhere securitized. So the whole approach is to ensure that the government has responded comprehensively for the NBFC issue. And if we have responded comprehensively to the NBFC issue without understanding the regulatory shortcomings, it would have been something which you may want to ask more questions. But now what I want to tell you is it's a comprehensive approach, understanding that the regulatory powers also will have to be addressed, and that is being moved to the RBI. And one other big thing that I'm sure all of you all would have noticed, there is about recapitalization 70,000 crores for the banks which is being given, and because of that we expect, even if there is this debate that no, it is not a liquidity issue, banks have money, they are not passing it on, or they are passing it on higher rates, and that is not getting moved over to the citizens, that issue should now stand squarely addressed, because that fund is going to help the banks to be a bit more easy with their credit extensions. Then many other points which could otherwise get lost, I would broadly only indicate about the way in which we have decided on the government holding 51%, on the disinvestment. All the targets are reasonably, realistically placed. Every target that we've given, tax collection, revenue collection, are all absolutely reasonable limits. There's no exaggeration of tasks of the assignment. So I would think there's emphasis on green, affordable, ease of living for common citizens. Infrastructure gets priority, like the way in which the last 5 years consumption in the rural areas is being pumped by the government's expenditure on infrastructure, so that in situ benefits for workers who are working in these projects will reach money, actual money, real money will reach the rural consumer. So broadly, that's the kind of line we've taken. Startups have been given a whole set of tax benefits, whole set of approach which is going to make them feel a lot more ease of doing their business. Startups have been given. One point which I forgot to mention, or probably I didn't elaborate in the budget speech, was how stand-ups have made a big difference for social transformation. Today, the manual scavenging issue is something on which all of us really feel very bad. but stand-up has been so effectively utilized, along with startups designing robots which can help in reducing the monotony and the drudgery of that job. Today, the effective combination of startup and stand-up, together with banks utilizing that facility, has given the chance for many of the SCs and STs to come out as entrepreneurs. Now they have a company of their own and they employ, and this has employ a lot more number of people. This is a part of what we have had in our stakeholders consultation. So in a way, this budget is setting a vision, setting a target, achieving the target or laying out plan to achieve the target, not just with one rasta, but touching every sector of our society. And banks which have had recent difficulties have been addressed. NBFC crisis has been addressed. More regulatory and other powers are being transferred to where they rightly should belong because of the capacities that exist. So as an opening statement, I would only probably say this much, but very clearly, if there are very genuine concerns about, what will happen to social sector, is this happening or not, I can straight away tell you, welfare for SC, welfare for SC, welfare for ST, welfare for the poor are all increased. The outlay is increased for all of them. So there's no shortage, or we have not pinched on those areas. The fund allocation for these areas have been increased. And the big idea that we have to get all the fellowship-related money, scholarship-related money for higher education and the research-based money, which are spread across very, very many ministries, are now pulled in, so that there's one agency which takes care of that. So this is about all that I want to say in the opening statement. I would think this, and also for, women, SHG, one woman in every SHG will get at least ₹1 lakh for her business through the Mudra loan. And their overdraft facilities are also increased. So we've tried addressing all the segments, sectors, without denying anybody else. So.
Okay, Lakshman.
मैम मैं लक्ष्मण CNBC आवाज़ से इसमें दो चीज़ें ऐसी हुई, जैसे पेट्रोल पे हम लोगों ने ₹2 बढ़ोतरी की, और दूसरा एक सर्टेन अमाउंट से ज़्यादा कैश निकालने पे टैक्स लगाने की बात की है। इसके पीछे दरअसल मकसद क्या था? ये माना जा रहा था कि इस प्रचंड बहुमत के बाद लोगों को कुछ खास तोहफा मिलेगा, लेकिन इसको थोड़ा सा नकारात्मक अंदाजे से देखा जा रहा है।
तोहफा मिलने में भी आपको दिखता नहीं है, बहुत तोहफा है। और पेट्रोल और डीजल का विषय में, it is very clearly global situation being what it is, and India's funding, public funding requirement being what it is, there's always this demand that fund has to be mobilized without hurting individual taxpayers much more. But at the same time, let's also be clear, petrol and diesel are not in the GST. So we want to make sure that we don't expand on individual personal income tax so much, but where there are public transport coming in nowadays, individual spending on fuel, but particularly biofuel being promoted, this kind of a fuel is something which we wanted to address. That is why. And cash withdrawal, आप समझिए 2 crore तक per account, one account से 2 crore within a year, 1 crore within a year निकालने का आवश्यकता क्या होगा? 1 crore from one account withdrawal of cash. I don't know, I don't comprehend this. But yet, if you're a taxpayer and you're filing a return, with that you can reconcile this. This is not a TDS aside from that. That will get reconciled. जो करना चाह रहे हैं आप कैश के साथ, वो प्लीज आप इलेक्ट्रॉनिकली ट्रांसफर करो, कुछ TDS VDS नहीं है। हम आपके ट्रांसैक्शन के खिलाफ नहीं है, कैश के खिलाफ।
रुचि।
Ma'am, congratulations on your maiden budget. I'm Ruchi Bhatia from ET Now. Ma'am, you have in the budget, announced a lower of 3.3% for 2020, and this while maintaining support for growth as well as income. Rating agencies are saying that this is going to be a challenging task. How are you planning to, make sure that you're able to boost growth at this point of time? Also, just to add to that, if you could help us understand how much revenue will you be able to raise through the revenue raking measures that you've undertaken?
So this has been very carefully considered. The revenue side, as compared to the actuals of 18-19, which are available now, the direct taxes have been budgeted to increase only by 17.5%, as against something like 23-24% earlier. Indirect taxes are going up only by 15%. This brings realism to it. It also includes the effect of the excise duties as well as on the income tax. So these are very realistic targets in our judgment. So revenue is that. There is also an increase in the non-tax side, which is going up by, we expecting better dividends. On expenditure side, it's more or less same as the interim budget, only an increase of about 2,000 crore or so. All these put together gives us a saving of about 6,000 crore as compared to the interim budget. That brings down from 3.4 to 3.3. So it's a realistic budget on both sides, on the revenue as well as on the expenditure, and this is doable. Some concern which has been expressed that outside the budget there might be a borrowing. Even there is a reduction. The fully serviced bonds, which were about 64,000 crore last year, are being brought down to about 57,000 crore. So on everywhere there is a realism, and there is nothing outside this, and therefore I think you should take them as reasonably credible. Thank you.
Mukesh Kusi.
Sir, ma'am, my question is regarding the corporate tax. There is a tax reduction that you've proposed for corporates with 400 crore rupees of over turnover. How much of a revenue loss does it come, and why did you not choose to give it to the complete 1% which was left out last time in the budget? Because there was already a roadmap towards reduction of corporate tax. Only 1% of corporate tax assessees were left out, but still the entire 1% is not covered. How much of a revenue loss it is, and what is the thinking behind to not to extend it to the remaining 1%?
Well, I think we are only progressively moving towards fulfilling our goal on that, and by bringing in more number of industries into that lowered rate, we are clearly sending a message out there saying we are not trying to stick to rigidity on the rates about corporate tax. But as regards revenue loss on that, I would like Secretary to.
The corporate tax rate, till now it was 250 crores. So 250 crores, and now this limit has been raised to 400 crores. So the revenue loss that we have estimated is around 4,000 crores that the government will have to forego. But it covers, as said by Honorable Finance Minister in her budget speech, it covers 99.3% companies who are having turnover less than 400 crores.
Hi, I'm Shubham Batra from Cogensis. My questions to Finance Secretary on the budget numbers, particularly how have we factored in FY20 from the RBI dividend? There's a higher allocation there. And on the recapitalization side of PSU banks, the 70,000 crore, is this via recapitalization bonds?
The Reserve Bank dividend will come after the Reserve Bank's meeting takes place.
So, but how much have we factored in FY20?
We have placed something close to about 90,000 crores.
Okay.
And for the bond, it's as was done earlier. It's below the line. So it's part of the fiscal, it's not part of the fiscal deficit, but it's part of the debt. Same methodology, capitalization bond.
Ma'am, this is Mukesh Kaushik from Dainik Bhaskar. Ma'am, before coming to this ministry, you were also defense minister, and there was expectation in defense forces that there would be substantial increase in their defense budget when full-fledged budget would be presented, but you did not mention anything about defense. Is it not increased or left at the same level where it was announced in interim budget?
If I have not mentioned, it doesn't mean that I have not increased. On the contrary, I have actually increased. Only I have not mentioned it there. I'll read it for you. See, defense, there are four heads on which defense is getting money. Defense pension, the increase from the RE stage of 2018-19 to today is 1 lakh 6, I'm reading the actual amount, 10,067, am I right? No, 1 minute. 1 lakh 6,775 crores was in the RE. Now it's 1 lakh 12,080 increase. We go to the revenue, 93,000, no, wait a minute, capital outlay on defense services, 93,982 in RE stage. Now it's 1 lakh 3,394. Then go to defense on revenue, defense services on revenue, 1 lakh 88,000, 1 lakh 8,000, am I right? 1 lakh 88,118 crores was in the RE of 2018-19. Now it's 2 lakh 1,902 increased. There's one more left, which is a smaller item. Civil, Ministry of Defense, Civil. That was at 16,318 crores. Only that has seen a 13,635 now, a 3,000 reduction. Because we've already given some to them, that will be adjusted there. Otherwise, under every head for defense, it's an increase, substantial increase.
Okay. Madam.
So it probably helps to have a former defense minister as finance minister.
Madam, I am here. Madam, Dr. Manas Banerjee from Northeast and Bengal. I have gone through your budget speech, but there was nothing, no mention of Northeast. What about your allocation in Northeast, please?
Northeast. Just as there was no mention of defense, but it had increase. Northeast, you like to know. B 2018-19, 0.47 lakh crores. Now it is 0.59 for the Northeast region as a whole. A 25% increase, would you say?
Yes.
I'm Rishti from Bloomberg News. Could you give us some details on your overseas sovereign bond announcement? When do you plan to raise and how much are you planning to get through that?
So this is the beginning which has been made. So it's a policy announcement that we would be starting raising sovereign bonds abroad now. We have not decided on exact amounts. We will do that kind of analysis. And soon we'll come up with what kind of beginning we will make. But certainly the start will be made now on the sovereign bonds.
मैं प्रशांत हूँ एबीपी न्यूज़ से। एक जो क्रिटिसिज्म जो अभी तक हम लोगों ने सुना है वो ये है कि एक कॉन्ट्रडिक्शन है। इलेक्ट्रिक वाहनों पर आप लोगों ने छूट दिया है जो कि बहुत ज़्यादा अभी चलन में नहीं है, लेकिन पेट्रोल डीजल पर सेस लगाकर आप लोग महंगाई बढ़ेगी उससे और मध्यम वर्ग पर भी और सब पर भार पड़ेगा। दूसरा एक और भी एक चर्चा सुबह से बहुत कौतूहल का विषय बना हुआ है मैम कि आपकी लाल पोटली आज लाने का क्या ये था, क्योंकि लेदर बैग लेकर नॉर्मली लोग आते थे बजट को, उस पर कुछ बताइए।
See, first of all, हमारी एनवायरनमेंट कमिटमेंट के लिए gradually move out of fossil fuels and go towards renewable energy. Unless we give substantial incentive for renewable energy, particularly when it comes to the question of mobility, where emissions from vehicles which are using biofuel, fossil fuel, is the main reason for suspended particles in the air and so on. So we wanted to make sure that if you have made a good commitment for improving the air pollution conditions, we have to support electrical vehicles. And they are coming in. Indians are also manufacturing. So unless we encourage them in a significant way, move away from fossil fuel to electrical vehicle is never going to happen. We also think from the point of view of employment generation, investing in sunrise sectors such as electrical batteries, solar batteries, lithium-ion batteries, there is a big scope for India. So simultaneously, as we're giving this facility and incentivizing buying of electrical vehicles, we are also giving incentive for investment in solar storage battery capacity and also lithium-ion and so on. So this encouragement towards renewable energy, particularly for public transport and mobility purposes, is from both sides. It's not as if we are not conscious that the production of electrical vehicles are not as many as we wanted, and we want to move towards that. So that's the logic behind it. And as regards the red color, what did you ask me? Why I have not used the leather bag? I thought it was high time that India moved out of the British hangover. So it's good enough for us to come and do something our own. And this was easy for me to carry also. Very Indian.
Ma'am, this is Anuradha Shukla from New Indian Express. Here, ma'am. My question is that, by putting some increasing tax on the high net worth individuals, how much revenue are you expecting out of, that?
You want to say something on that, please?
What we have estimated is around 12,000 crores we'll get by increasing this surcharge on the category from 2 crore to 5 crore and 5 crore and above.
Madam, on your right here. On your right, ma'am. On your left, I'm sorry. Ma'am, you have increased the disinvestment target. You mentioned in your budget speech that your government is open to, move a strategic sale in other companies. So would...
All right, we'll continue to keep an eye out on what Finance Minister is saying. Let's go across now to Dr. C Rangarajan, former Reserve Bank of India Governor, for his thoughts on the budgets and some of the structural changes that have been made as well. Dr. Rangarajan, thanks for your time here on Bloomberg Quint. Let me first ask you what you read into the thrust of the budget. They've maintained a 3.3% fiscal deficit, so in some ways they haven't given in to that temptation of pump priming the economy at a time when it's weak.
I'm not able to hear you. Can you make it louder, please?
Okay. Dr. Rangarajan, I'm going to try again. I wanted to get your first impressions on the budget and the fact that at least on the headline number, fiscal consolidation has been maintained.
The budget has to be framed against a background of declining growth rate and distress in agriculture and problems in many other areas. And therefore, one expected the budget to address these problems. In a sense, it has addressed these problems and come up with various proposals and so on. But one of the critical issues facing was the decline in the investment, and which was leading to a fall in the growth rate. But it is not very clear from the budget speech and the documents whether the proposals that are being put out will have a clear impact on accelerating investment. But one thing that stands out very prominently in the budget is the commitment of the government and the finance minister to fiscal consolidation. Actually, is set at 3.3% of the GDP for 1920, which is a slight improvement over what was indicated in the interim budget. But the actual implementation of this will depend upon how the revenues will grow, both tax revenues and non-tax revenues, and how the expenditures will move. The analysis of the numbers indicates while the tax revenue is expected to grow modestly, the non-tax revenue is expected to grow very sharply. Therefore, what is really required for the government as it moves along during the year, watch the expenditures and the revenue. And if the revenues are not growing at the rate desired, probably they should make adjustment on the expenditures. So the broad thing really is, yes, the commitment to budget deficit fiscal deficit is good. Perhaps some of the proposals, the expenditure programs are also in the right direction. But whether they will all lead to an acceleration of investment immediately is a matter of doubt.
Dr. Rangarajan, a few questions. One, since you mentioned non-tax revenues, the government continues to budget for almost 90,000 crore in dividend from the Reserve Bank of India, even though they have given an interim dividend already earlier in this year. So do you think this tug of war over the RBI's capital is not over yet? How do you view that, sir? Dr. Rangarajan, if you can hear me, I wanted to get your views on the government still budgeting about 90,000 crore in dividends from the Reserve Bank of India, sir.
Yeah. Well, I think that is in the direction in which it has been moving. Perhaps that's a fairly large number, but the committee is still sitting on it. The committee's recommendations are known. Further discussions will. So that is why I said that non-tax revenues, which include interest and dividends, are pitched at a higher level, and therefore the progress of expenditures will have to be adjusted as the revenue projections become clear.
Dr. Rangarajan, the other big structural change that has been announced is that the government will now, as a sovereign, borrow overseas. What are your thoughts, sir? Are we ready to go in that direction?
I have my own doubts. I mean, this we have discussed since in the early 90s, immediately after liberalization. We have always thought that it is much better that sovereign borrowing in foreign currency should be avoided because the only institutions that have gone out to borrow are public sector enterprises. That we had agreed to and that we allowed. But allowing the government to go and borrow in foreign currency, in my view, is perhaps something that can be avoided. Certainly, we are now allowing the foreign institutions to buy Indian government bonds in rupees. Therefore, the exchange risk is borne by the outsider. But if you borrow in foreign currency, then the exchange risk is also borne by us. May not be the most desirable thing to do.
Dr. Rangarajan, in some ways it's a realization of the falling household savings and that perhaps that pool is no longer enough to fund the investment needs of this country. If we are going in that direction, who sets the prudential limit? Would this be the RBI limit for foreign investment in government bonds in terms of how much of the pool they can hold?
Well, I think it's a matter of decision between the government and the Reserve Bank. I mean, how much they should really borrow, because that again depends upon the ability of the government to repay later on and so on. Therefore, first of all, as I said, that I don't think it's a very wise decision to do. But second of all, if it is being done, then both the Reserve Bank and the government should really sit down together and see how much they want to borrow. Now, I would say that if, for example, the foreign investment that is coming into the country is really adequate, then the government should avoid going outside and foreign borrowing in a foreign currency. I think it all depends upon the extent of foreign funds into the country. At the moment, it seems to be adequate. The minister herself said at one point that the flow of foreign direct investment and the flow of portfolio investment seem to be of the right order. If that is so, I do not think there is any compelling reason why the government should go out and borrow.
Okay. Dr. Rangarajan, the government has also put in another 70,000 crore for bank recapitalization. They have said that they will do some governance reforms, but we didn't get any specifics. In addition, they have backstopped NBFCs to some extent by saying that PSU banks will provide credit guarantee. On both those counts, sir, what are your thoughts?
Well, I think the recapitalization to the extent of 70,000 crore is probably appropriate. I mean, I think that's what they should do, because if the banking system is to move in the direction of lending more, then they should be equipped with it, because the lending capacity of the banks is largely determined by the amount of capital that they have, and therefore putting in this money is important. And I had always felt that instead of doing it in phases, whatever capital that they want to give to the public sector banks must be done at one go. Therefore, that's a good idea. The other is on the NBFCs, the kind of liquidity or support that has to be given is something that must be the concern of the Reserve Bank of India, whether they think that liquidity is needed, and if so, they can think in terms of providing it. But the view that the Reserve Bank had taken recently, apparently, is that the NBFCs do not need a special window, and they can be helped in other ways. Therefore, I would personally think that the best institution to be of help to the NBFCs would be the Reserve Bank of India.
Dr. Rangarajan, two last questions. One is on the revenue side. The government has in some ways gone in the direction of a super rich tax. How do you see that? Inevitable, given that the spending requirements, especially at the bottom of the pyramid, are quite large right now, particularly given the PM Kisan scheme which has been introduced?
Well, the surcharge on the highly rich people has been talked about even earlier. And I think we did that also in the earlier. In the UPA government also introduced a surcharge on what may be called the super rich. But perhaps the extent of the surcharge is perhaps very high. I think it adds significantly to the tax burden. Therefore, that may have some adverse impact. Second, also, that I feel that the state governments would also be very unhappy because this surcharge is not shared with them. And when particularly the surcharge is substantial, the state governments may feel somewhat upset by this.
Dr. Rangarajan, last question is on the digital payment space, only because they have once again gone in the direction of trying to disincentivize cash use, this time saying a 2% TDS will be imposed on cash withdrawals above 1 crore. So this pull and push to try and reduce cash in the economy now through various means, do you think that's justified? Should this not be a natural process?
Well, the objective is clear, namely that you want to discourage the cash payments. But whether this is the most appropriate mechanism, I do not know, because it is also about 1 crore rupees. Therefore, it will really hurt people who really withdraw fairly substantial amount of cash. This is what's trying. I mean, I don't know how effective it will be, and whether the people who want to really use cash find other ways of avoiding it and so on and so forth. But not a bad idea. I would say it's not a bad idea.
Dr. Rangarajan, then your final word on the budget. What would you say, describe it as?
It addresses some of the issues, but as I said at the beginning, since accelerating investment is important, and both the survey and the minister also spoke about investment-driven growth. But I am somewhat doubtful or skeptical about the budget proposals having a direct impact on investment.
Dr. Rangarajan, thank you so much indeed for joining us here. Much appreciate your wisdom on some of the issues that came up in the budget. With that, I'll throw it back to you both.
Thanks a lot for that, Ira. And those are interesting points highlighted by the former RBI governor. But coming back to the markets then, and for the equity markets, it's also an important budget. We've seen a lot of push with regards to what foreign institutional investors and what's in store for them. For individual stocks, the push of public holding from 25% to 35%, that is another aspect that will have its own bearing on various stocks where the promoter holding stands at about 75%. Nilesh Shah of Envision Capital, he's joining us on the show right now. Nilesh, thanks very much for taking out the time. Your initial take on the budget and what it doled out particularly for the equity markets.
Well, I think this budget is, I'd probably call this a very supportive budget. I think some of the short-term challenges which the economy faces, especially segments like NBFC, HFC, the housing sector, I think it tries to address a lot of those challenges. And I think to that extent, it's supportive of basically a growth rate of around 7 to 7.5%. I think for equity markets, there's nothing very specific. But of course, the reduction in the promoter holding and increase in the free float, I think that's a long-term positive, which means that more allocations, especially for people who follow benchmarks and allocate based on free float. I think for global investors, it calls for a higher allocation. But in the very short term, it depends on, of course, the time frame over which this will get implemented. If it's going to be implemented over the short term, it means a lot of overhang of a lot of paper, which probably may not be the best of things to have.
And for MNCs, this may not be the best thing for them, right?
Yeah, but I think they have no choice, because I think right now for them, India is an important market, not just basically from a financial market, but I think from a consumer market. So I think it will be a small price that they will have to pay in terms of lower shareholding. And I think some of the bigger multinationals, I don't think should have this kind of problem. I think names like HUL, ITC, I'm not quite sure if they have a holding which is more than 65%. Some of the smaller multinationals in, say, the Capex space like ABB, Siemens, I think they could have some issues. I think apart from that, there would be a lot of tier 2 names, mid-cap names where promoters own as high as 70 or 74%. And in this environment, there may not be enough appetite for that kind of paper. Of course, if the time frame is 1 year, 2 years, 3 years, there might be more appetite for paper from the tier 2 names or the mid-cap names. So I think on the whole, it's neutral for equity markets. But I think overall for the economy, I'd probably say that this is a very supportive budget.
just want to add here, I think last time when this 75-25% norm had come in, SEBI had given 3 years, and I think we're still following that because the new entities which do list, they do get 3 years of time, the promoters to cut down their stake. Though they're still mulling this right now, let's see if this comes about. The other topic, you know, the main thing from the budget which everybody was looking at was some sort of stimulus to come to revive the rural economy. Has that disappointed you? There's no major announcement on that front which will revive that, and once again, consumption, which is the bedrock of the economy, that needs some sort of infusion of money.
Well, I'm not entirely sure how much the budget could have specifically addressed the rural economy. The fact that I think the interim budget had clearly laid the contours of, you know, supporting the rural economy in terms of having the 6,000 rupee kind of passed on to farmers, and then of course when the new government was sworn in, I think one of the first things that they did was to make it more universal and cover all rural or cover all farmer families. So I clearly think that was already done in the interim budget, and I think when the new government took over, it was done at that point of time. So I'm not entirely sure how much could have been done in this specific budget. Yes, of course, some of the things like how do you kind of promote food processing industry, how do you promote agriculture infrastructure like warehousing and all of that. Maybe an idea like kind of giving a tax holiday to anybody who kind of, you know, sets up agriculture infrastructure, warehousing or food processing parks or food parks. If you could probably give them a 5, 10, 15-year tax holiday, then that probably could have been an idea which could have been supported and which could have boosted the rural economy. But obviously that would have been a more medium to long-term measure. But otherwise, I think apart from that, in the very short term, I'm not quite sure what more the budget could have done.
Dinesh, if we look at the markets and 7 minutes to go for the markets to shut shop, banks haven't corrected, the others have, which tells us a story that maybe the markets are disappointed with or circumspect about the companies which have maybe that high public holding. There's also this thing that has come in for IT or for buybacks by and large. Do you reckon it could hamper the IT companies? Because the notes seem to suggest that in order to make sure that the quote-unquote abuse, I think they've used the term, for DDT, and therefore companies indulging in buybacks will also have to pay 20% tax. Would you reckon that's the reason why the IT companies, TCS is down about 4.5, the others are down 2. Is that the reason why they are down? And part 2, is there merit enough for these to be down? I mean, or they'll digest the displeasure? My sense is that they will digest it because clearly if you look at it between dividends and buybacks, assuming the taxes applicable are equal, I still think that companies should go ahead with buybacks because at least that's EPS accretive in the long term. It's a more capital efficient strategy. But if they have to pay the 20% tax then? The other option is to kind of give dividends. Sure. On which also the DDT is 20%. Okay. Of course, when you do a buyback, the investors also have to pay a 10% long-term capital gains tax. Whereas if it is dividends, above 10 lakh rupees of dividend, you have to pay a particular tax. So to that extent, on the whole, it just removes any aberrations or anomalies or any kind of tax arbitrage that anybody could have indulged in. But I don't think it's going to be any kind of a disincentive. I still think a management, if I had a choice between dividend and buybacks, it should do buybacks versus dividend. Okay. Obviously, before this budget, it made more sense even from a tax arbitrage point of view to do buybacks. But now that arbitrage has been plugged, nevertheless, buyback is a more capital efficient measure versus dividend. So my sense is this will get absorbed, it will get swallowed, and I think the markets will move on post whatever the initial jerk.
All right, the auto pack, instead of getting something favorable, has got another blow. I mean, the push that they have given towards electronic vehicles, I mean, what does that do for an already suffering auto pack?
Yeah, clearly I think the auto sector anyway faces fundamental challenges. There are challenges to do because of shared mobility. There are challenges to do with technology disruption, which is coming in through electric vehicles. There is public infrastructure like metros, which are shaping up. The finance minister talked about almost some 650 kilometers of metro network, which has got created, which means a lot of urban India is covered. And therefore, the compulsion to own a car or the compulsion to own a second car, I think that gets weakened. I mean, that no longer remains. So I think there's a fundamental challenge. Electric vehicles, if not now, 3 years, 5 years, 10 years down the line, is a hard reality or a stark reality which the OEMs have to face. I think what this budget does is to kind of tell the OEMs that now go ahead, get your technology right, and be EV ready, which means launch your electric vehicles. You know, I think that's the basic loud and...
They're still combating BS6 and then we're throwing electric vehicles on that.
So I think yes. I mean, in a way, yes, it's clearly a challenge for them. And I think there's a structural challenge for the auto sector. So I'm not sure whether the budget has spoiled the party for them, but I think in general they were facing challenges. Maybe there were expectations that the budget will do something for the conventional OEMs. It has not done that. The only thing which can be done with them is probably, you know, rationalize or moderate the GST tax rates, which anyway is not the purview of the budget. So I think probably when the next GST Council meets, maybe that could be an agenda item.
Nilesh, the other space, I think, which has had a huge beating, I'm just checking, the Nifty Metals Index is also down 4%. You've got the steel companies, which I've seen cuts about 5 to 8%. I think they were expecting some sort of anti-dumping duty to come by, which has not come.
Yeah, again, I think the anti-dumping, if the expectation was for an anti-dumping duty, again, those are things which probably get done even outside the budget.
Correct, the way we've seen for the tire companies in the recent past.
Yes, absolutely. So I think the metals would probably have cracked on their own. I mean, I'm not too sure entirely
it's
whether
a
the
sharp
budget...
correction, yeah.
Yeah, but I'm not sure if it's the budget which is responsible for that crack. I mean, I can't correlate anything on the budget which has any impact on the metal company.
You know, something that's happened though, and I must say, just because we are a minute and a half away and then we'll continue our conversation with Nilesh, something has happened in some of these companies which were anticipating a lot from the budget and hasn't come about. So fertilizers as a pack is washed out right now. Maybe there's a lot of expectations about fertilizers coming in. We were talking about it in the morning. So fertilizer stocks by and large are down in trade. Real estate has looked wobbly. Maybe the low income companies like Mahindra Life, etc., catering to that bucket is okay. But DLF, Oberoi Realty, etc., all of them have corrected very strongly. And I'll maybe wrap up the mid caps and then we'll of course go on to the large caps. But just one last word on the mid caps which are losing out. There is a KRBL which, for issues of its own, is down about 20%. It's been like that throughout the trading day. Some of the rail companies, again, expectations from the budget maybe not quite coming out. They are down in the session today, so do watch out for that. And PSU banks, by and large, are ending the day on a good note. Corporation Bank, blah, blah, etc. All of them have done reasonably okay for themselves.
The large caps, though, are probably sinking right now. Most of them, rather. Just a handful of, I think, 6 stocks are in the green at this point. Yes Bank being the most brutally beaten down stock in the last few days. The stock's at 88 now, so it's down about 8.5%. NTPC loses 5%. M&M down about 4.8%. UPL, some profit taking there and heavy at that, but that still leaves you with a 7-day tally of 5% gains for the counter. All your IT stocks, have bled out in today's session. Coal India is down 4%. ONGC is down 4%. But this could also be a function of the fact that, you up until the budget run up, you've actually seen the markets moving up pretty steadily. So about 6% on the index so far to the run up to the budget. So that could probably just be, some profit taking off the table, I assume, Nilesh.
Yeah, absolutely. I think I'd probably think so. I mean, of course, there weren't any significant expectations around the budget, but nevertheless, we'd seen the market take some kind of support in June around the levels of 11,600, 11,700. You saw a run up towards that. I probably think it's just some bit of profit booking which is happening out there.
We're back to basics now. We'll be watching out for the earnings growth. What is your estimate for FY20?
Yeah, absolutely. I think, the day goes and I think from next week, again, the earnings season rolls out. Of course, I still believe private banks, consumer and technology, I think this is really the 3-pack which have been the strongest bastions of the market. And that's something which will continue. The narrative does not change. And that will remain the focus, I think, now for the next few months.
Nilesh, the markets have corrected about 1.5%. A lot of details are now starting to trickle in after the press briefing that has happened. 3.3 appreciable number. There are some assumptions out here. I just saw Ira's tweet which spoke about how, and of course, I think the DA mentioned this as well. The assumption of the dividend from the Reserve Bank of India is very high.
90,000.
90,000 crores. 3 days ago, we did a story which suggested that the Bimal Chalan committee was probably in a favor of an 8,000 rupee dividend and not more. My question to you is, will the market, what happens, nobody will know. Will the markets over the course of the next 2 or 3 sessions take this math into account and probably be a bit circumspect about it? Do you think that could happen? I'm not saying what your view is. I'm asking you if the market might be a bit circumspect.
Okay, so probably here, I think we'll have to probably look at the market from two perspectives. One is what the equity market does, the other is what the bond market does.
Okay.
My sense is equity markets will be less concerned about the fiscal deficit number, in the sense whether it's going to be 3.3, whether it's going to be 3.4, whether 90,000 crore dividend from RBI is in a way a number which is credible or not, whether it happens or not. I think equity markets will be less concerned about it. The bond markets have rallied, and the bond markets is something which will really be more concerned, or should be more concerned. The bond market already knows that this is essentially what the assumptions are, and it seems to be pretty much fine with it. So I think it's clearly the bond market which probably will need to react, if at all, rather than the equity markets. The equity markets, like I alluded to earlier, the equity markets one is of course earnings. That's what the markets will be focused on, and the second, of course, is this whole overhang about this the promoter holding or the free float getting increased from 25 to 35%. I think beyond that, the equity markets won't be too concerned about the deficit number or how it is coming.
You think this? So she also, outside the budget, in the press announcement, she spoke about the defence budget and the capital outlay there being upped. So I think from 93,800 crores to 1,03,394 crores. Do you think this has any material impact on the likes of L&T or any of them?
No, I don't think so, because I think this hike is what? It's about 10%, 11%. Yeah. The growth estimate itself is around 12% of the overall economy. So I'm not entirely sure what this actually means for any of the defense companies. Of course, we have to keep in mind that there is a huge push towards more domestic manufacturing of defense equipment. So that's, of course, that could be a structural opportunity. But I still think it's very, very early days. I don't think we have enough to really pick and choose from. There's only the large PSU basket which is there. But I think beyond that, there's nothing much.
What about the divestment target? It was quite decent, 1.05 lakh crore. If I'm not mistaken, last 2 years they were able to meet the target because of the internal change in hands which was happening between PFC, REC. They were buying government stake and ONGC, HPCL. What, according to you, can aid this time the divestment target of the government?
Well, I think probably it's going to be the same road ahead. I'm not entirely sure whether it's going to be a different perspective. I think given again how the markets are and how the sentiment is, I don't think a complete open market offer for sale opportunity is there right now. I mean, of course, it could be a different matter 1 or 2 quarters down the line. The sentiment improves dramatically and there's a lot of appetite for government paper, then it's a different story. But otherwise, I think the modus operandi of the last 1 or 2 years will remain as essentially the road ahead for this financial year as well, which means that you kind of, in a way, do some bit of disinvestment through ETFs, you do some bit of through the insurance companies, and then, of course, some of it could be essentially through the larger institutions as well.
Well, let's wait and watch. Time will tell. But Nilesh, thanks so much for taking the time out and giving us your thoughts. Really appreciate your time.
Thanks.
And viewers, thanks for tuning in to this very special broadcast from Bloomberg Quay.